Pacific week. I wanted to put something out here as we close out the 4th of July weekend, as I've gotten back into town here, and I've not forgotten about you over there on the YouTube channel. I just really haven't had a lot to add to the conversation. I'm going to get back to publishing videos and see where we go once we start to get out of this crazy topping pattern here. And I want to show you my thoughts on that. Top. I don't even want to use that word. I mean, it's just crazy right now. I mean, we're literally printing to the tune of like $1 trillion. I shouldn't even say printing. We're spending $1 trillion every 3 months right now. Budget deficit in May. I haven't seen the figures for June yet, but the budget deficit, which is the income taken in above taxes, was like at $360 billion for 1 month. And it just amazes me that nobody's talking about this. Nobody's raising any kind of alarm that this is not right. But the only person I heard saying this is not sustainable last week was Mr. Powell, our Fed chairman. This is not sustainable. We just can't keep spending $1 trillion every 3 months. Again, I showed you and I talked about this in a video a while back, that it took us 225 years just to get to $1 trillion in debt. And we're now running at $1 trillion every 3 months in spending. I mean, get your head around that. Now, what's so interesting, and I want to get into that a little bit here in this quick video, and I'm not going to get into too much. There's a lot of data that we've been sharing. I continue to do work daily on the Discord member platform. And again, if you want to get information about that, Gmail me at destinytrading@gmail.com. Actually, let me get up my pointer here. Good thing as we're talking about that. Been a while since I've done a video. But let's get into some things here, because we're at an historic top here. And a part of me has always said that at some point you're going to reach a point of velocity where you can print all you want. You can spend all you want, but it will not create any more velocity to push the market higher. And I truly feel we're very much there, that they can do whatever they want and they're not going to change the outcome to the market. That it's just not going to be able to get any more forward momentum, because it really is all about this idea of momentum. So there you go, destinytrading@gmail.com. So let's not waste a lot of time here. Let's get right into it. The disclaimer. Again, these charts and updates are for educational entertainment purposes only. Please read it. And always do your own decisions. Now, I've got a lot we could look at. So I want to go back to just a couple of the old models I shared a while back of this harmonic pattern here out of the 2009 low. This beautiful looking, you notice a higher high here on the left foot, a lower low here on the right foot, just a beautiful looking swan formation, and in a harmonic swan of death pattern. Again, there's that statistic. Think about it. 70% of all debt was created just in the last 17 years of the 250-year history of this nation as we hit this 4th of July. In 17 years, we've created 70% of this nation's debt, and everybody's celebrating. I'm not celebrating this 4th of July. I love this country. This country was such a beautiful place to raise my family and grow up in. And I don't know what we are going to leave for our children. And it will not be pretty. Because I know what the data is saying. It will simply not be pretty. And you can see in the harmonic swan of death at this top. Here's our V channel down here. This is saying this is ready to begin a 10-year collapse. I think we're going into a Great Depression, and I'm going to continue to say that. Again, here's our model. It hasn't changed, even with this little rally back up. The triple top from 1929. The pink line hit to the high right here where we are right now. The other top here right in the year 2000, and the third hit up here at the black line channel, which we have never hit. The last time we were not even doing black line here. We didn't even hit black line here, and now we've gone pink to black on a triple hit. Now, there was one other thing I wanted to add to this conversation, so let's fast forward through all this data here And let me find it. Excuse me, I didn't just organize all these. I've just got a lot of stuff here that we've been going over. And I wanted to show you this idea that I found very interesting. I haven't shared this before. I did put it up, I think, on Twitter, but I want to discuss it here because I think it's really important. So let's just scan down here. Bear with me in this video today because we're going to be jumping around here. Here we go. Let's jump into this while we got it. Here we go. Recent federal mandatory discretionary spending. Look at this. Total spending here. Look at this. Starting in 2020. Look at this. It's just gone off the graph here. We have another record high here in 2024. And 2025 is on the same agenda. Look at this. Just, they cannot stop the spending. What is going on here? And I honestly do believe, you know, they broke the business cycle. We talked about that. But I just honestly do believe, let's go here. I want to go like this, but let me remind you of this vertical parabola ongoing here. You can see that we have literally, look at this, it's just gone vertical here now. And whenever you get a vertical parabola blow off, they end in tears. This is going at some point, and maybe we're going to see this happen very, very soon, begin to collapse. A parabola vertical blow off to trillions and trillions and trillions of spending each quarter. And look at this model. I want to show you this because this is so interesting. This is the Dow. You know, let's look at some Dow theory here. You know, Ray Dow, who created the Dow theory many years ago. Richard Russell, who used to live down in La Jolla and absolutely wrote a great newsletter called Dow Theory. Miss you, Mr. Russell. You were a really kind gentleman. Back in the days when there used to be some newsletters published, before we had so much data on YouTube and everywhere else, we could just get some good letters in the mail, in our email, and go over them. Kind of miss those days. We're just like in data overload these days. But take a look at this model here. This is so interesting. Let's zoom in on the beginning of this. Notice this signal low in 1904. You imagine that? The Dow put a signal low. In other words, all the signals came together once here in 1904. The first signals, you notice this orange signal rising up here into a high, and then you notice that red signal out of 2004 going up. We will look at that in just a moment here. But notice we got the next signal here at the high in 1929, and then we watched this huge move down, 381 to 41 on the Dow. And then a new signal started rising. So take a look at that formation. And it's so interesting because right about here, 1913, right there, we had the Federal Reserve created. Now let's go over to the top of this. You notice this rising line here. One starting in 1904 and the second one starting at the low of the 1929 move in 1932. And then they all rose up to right here. And every single line has done, for the third time in the model, come all together and rolled over. The last time all the model lines came together in the model was 1904 and 2025. What is that saying? Here it is. That's that signal right there. You see it? Let's click in on it. It rolled over. Now this has rallied up a little bit more. We've got a triple top, it looks like, on the Dow. It is going to be an interesting couple of weeks ahead. And I'll discuss that with you in one sec. I mean, what is that? What is this parabolic blow off? What is this 1904 signal? This 1929 to 1932 part of that signal. What is that? We're going to find out really soon. Now let's just go fast forward. Let's jump to the present here. And let me just go to some thoughts on the first thing on this potential count on the market. Let's go right here. You know, this is finance, and it's interesting because we have the same sort of look on the SPX. I really thought that this high was what was the end of it. I thought this might have just been an ABC corrective type move, right? So here's the SPX, and here is actually, this is the NASDAQ, excuse me, because we're looking at NASDAQ Finance here. But notice NASDAQ Finance hit a low, and then it did a 1, 2, big wave 3, a wave 4, and a wave 5. So what's turning out now is my feeling that this was the top here being an ABC pattern, and then being the first move down and then back up of the A wave and then into a B wave. Looks like it turned out to be a final 5-wave push, and I'm pretty solid on this looking at so much of the data. And you can see if we had the SPX, it would be the same thing, right? 1, 2, 3, 4, 5. So I'm seeing, we're seeing a really clean 5-way looking pattern, and I'll tell you why that looks interesting. Let's look at what that could mean. Now, could that be an ending diagonal? An ending diagonal is where you have 1, 2, 3, 4, 5. So you look, the ending diagonal would be would need 3 touches on it. And I'll look at that in just a moment if that's what it is. But you can see we've already got a very clean wave 1, a very clean wave 2, a very clean wave 3, a very clean wave 4, and now we've had a very long ending wave 5. So we're getting within a week or two. My feeling is this wedge, you can see, look at this, just huge rising wedge into this 5-wave move, could run here a couple more weeks, or it could end. We'll have to see. You can see here, right, wave 4, and we got a 1, 2, 3. Now, my feeling on this is, could we get a clean enough count out of this? But we can still see we've got quite a bit of room here in this rising wedge, so we could get a pullback here, and then one last rally up to complete an ending diagonal. The problem with an ending diagonal is you need the channel to hit 3 times. So we only got, that would be like, that would be an ending diagonal would be like a, hit here, then a hit here, then a hit here, then a hit here, then a hit here, and then break down. So it's a very good chance here that we've got July yet to finish off this very much looking ending diagonal in the pattern. But I definitely feel that we are at the crux of something. So let's look at why I feel that. Now you notice this model right here going all the way back to 1996. You can see the trend is busting away. You can see the velocity has now rolled over, right? So it's ready to start heading lower here. You can't stay up here. This is ready to begin its move down. We now have a top. You can see it here cleanly. Look at this. This top in velocity and it's rolled over. This top in trend and it's rolled over. And the V channel's down here. Look at this. It's been a whole almost year of the market just sitting up here in this little pennant formation here. So we're right there. There's no question. We are right here to all this ending off. So we're going to have to see. You can see this nice focus here on this pattern. Look at the focus on the signal right here. Very clean looking. Wave 1, wave 2, wave 3, wave 4, and now the finishing wave 5. And again, as I just showed in that channel, does it need a couple of more weeks? Most likely it does. So we'll see how it sets up, because there's some other data here that's pretty ugly. Now what I wanted to just quickly show you here, and we probably won't get into too much more, was, remember I talked to you about the FIRE, right? Finance, insurance, real estate, and energy. I mean, it is the American economy. I mean, if you look at the broker-dealers right now, and you look at the financial services, and you look at housing and real estate, and you look at insurance, and you look at energy, it's not just the FANG stocks with the rally, huge rally in Microsoft, that's holding this up. But look right here. We're looking at the global insurance market. And you can see that it is topping out here. And it's been topping out here for a good part of 2024 and 25. And you notice now the velocity. Let's pull in on this head right here. You notice the velocity is now turned down and the trend is starting to break down. So you can see we had this big sell-off, right? But notice the global insurance with a nice, looking like nice head and shoulders, very large head and shoulders formation in global insurance here, looking like it wasn't quite ready. So the market rallied back up, because I really feel like some of these areas like global insurance and insurance in general, we can look at other insurance models, and I was talking to those of my members, And again, here, let's take a look at financial services. You can see here that the velocity is way below. Velocity is cracking away. But you can see just a month ago, we still had the trend up here. So here was our sell-off, and it came back up because financial services had not yet sold off. I'll show you. Look at, here's a close-up of financial services. So we got this initial sell-off with the market and financial services, and then it rallied back up. And look, it's hitting a new high here too, which I showed you other model finance, showing it was also looking like in a final wave 5 push. And this looks like a very nice triple top on the channel going up here too. But you can see we had to go back up because, look, the trend was still developing above. You notice we still were trying to top out here, but now velocity is rolled over and the trend is breaking away. So we're going to watch these, okay? I mean, the financial services, the insurance, we were looking at housing. Look, here's a model that's 95% of the market. This index represents 95% of the entire U.S. equity market capitalization. Thousands of stocks across various sectors, and it's designed to provide a comprehensive view of the U.S. stock market. And look what's happened here. We've had this final rally, right? Well, we could have come back up here, and you notice we're only, look at now, the velocity is now rolled away, and the trend is breaking away. We can't be up here. This model of 95% of the U.S. market, its toppy, is saying we're close, if not there. We see this everywhere. You know, we can't go higher here. Look, here's another one. Look at trend breaking away. Look at the red pricing right here in velocity. The market can't keep going up anymore. Look at back here. When this was breaking down, you know, here's your 2000 corrective move, here's your 2007 corrective move, and the market's up here as this is doing the same thing it did back here. Velocity coming out, dropping into the trend breaking away, velocity breaking away, V channel below. You can't price up here. They don't have the velocity, in my opinion, to push this market much higher. So we're going to see. We're right here. Like I said, maybe a couple more weeks. I'll come back at you with a lot of other data. There's much I could share here. It's really not that pretty. Look at the banks. Let's talk about the banks. There could be something coming down the pike with the banks. Look at banks here. Velocity's rolling away. It's broken below the channel. Notice we've never had the velocity break below the channel here, right? You see it? Notice how banks held here. Banks held here in 2020. Banks held here at the low in 2022, early 2023. Banks held here in 2012, and banks held here at the 2009 low. And look at the velocity coming out of the banking sector, trend just breaking away. There's no way you can't tell me the banks aren't in trouble out there. They have to be. Commercial real estate is a complete disaster. Auto loans, housing with the prices it's at, you can't even imagine what lies ahead in the banking sector. So we've been looking at that too. The banking sector looks ugly. Let's look at the housing model while we're at it. Here's housing. Got a sea of blue here, right? You see this thing I call a sea of blue formation? Look at the sea of blue formation over here in 2007. As it came down, and look at it, just came right down. Now we're going to have to see the trend do this, right? And then you see how the market collapsed with it. Look at the trend in the market. Right now, we still haven't gotten the trend breaking too much yet, so we're going to have to see. But look, housing is hanging on the edge here while we're priced up here. You can't price up here with housing down here. And we were looking at the housing starts too. Boy, they are ugly. Have you taken the time to look at the housing starts? Not pretty. And we're seeing some models that have a look to the 2020 crash type move. Yeah, we could see a 2020 type crash move. Look at this model. Look at us hanging out up here. We've never done that before, right? Look at, we could have rebounded back up here. You notice how we came back up to trend and then we broke out here. But look, this is still breaking away here. So anyhow, I'll be back at you. Just wanted to get a quick date update in here. Let you know what I was looking at that finishing wedge. We got into the month of July to see what it wants to do, but you know, this market can fool a lot of people. Maybe it doesn't need to do a perfect finishing wedge there. You know, maybe at any time it could decide to break down. I mean, since this is such a significant top, we've gone high enough. We've got a completed looking clean 5-wave count higher. You know, at some point, there's going to be players out there and programs that want to get out of Dodge ahead of everybody else, and they don't have much more time. So we'll see what it wants to do. Going to be an interesting couple of weeks ahead, and I'll be back at you. Thanks for tuning in. Glenn out of here.